Ladies and gentlemen, welcome to our latest podcast. Before we continue, obviously, this is not investment advice, this is just general information. It's our great pleasure to bring a friend of Redleaf Securities, Mr. Robert Millner from Soul Pattinson's. Rob, how are you today?
Welcome, Jonathan, and welcome to your listeners. Good to be back. Thank you.
Thanks for coming on board. And, it's always a pleasure having you on, given your wealth of experience in investment markets. Now, in that light, Soul Pattinson's and yourself has a long-term perspective when it comes to
Yeah,
investors.
yeah.
How do you maintain that? How do you not let the noise influence you?
Well, I think if you go back, this is our 121st year as a listed entity. Um, Up until after the Second World War, we were mainly we were all pharmacy in those days, and most people will remember Soul Pattinson pharmacies. And we had a small investment equity investment portfolio. And then obviously, after things settled down in the 60s after the Second World War, we then moved into different investments. Um, I think probably the first one after the change was my uncle, who was a chairman before me. He was fourth generation. I'm fifth generation. Um, he was invited in those days to join the board of a company called Australian Oil and Gas, and they were the biggest mining company in the 60s. And they did a lot of travelling around Australia and New Guinea and Fiji and places. And there was a chap called Professor Eric Rudd, who also sat on the board, and he was a professor of geology. And they worked out in the 60s that they thought there'd be a mining boom. So the Soul Pattinson and also the Millner family put a lot of money into companies like Pico Walls then, Cleveland Tin, BHP, um, Emperor Mines. A lot of those names people wouldn't remember. And obviously the mining boom came, and that really gave Soul Pattinson the next step up. We cashed out a lot of those investments at very, very high margins. And then we got involved with Brickworks. The Dawes family, who owned Brickworks, were concerned at that time in the 70s that with the John Elliots and those sorts of people that were Holmes and Courts were trying to trash companies and merge companies and take them over. So we did a cross shareholding with Brickworks, which is still in place today. And then our next major step into something was New Hope coal mining. So when you have those sorts of businesses, where you have 30, 40, 50-year time frames from a mine or a brick plant, you know, you tend to think long term rather than the noise that you hear tomorrow. And then we also got involved with the NBN television station after Christopher's case and Alan Bond decimated Channel 9 and Channel 7, which is now out. We paid $38 million for that, sold that for 250, and we still own 12% of TPG, which is valued at about $7 billion. So again, that's been another great long-term strategy. And, we've, over periods of time, we've still thought long-term, but, we've had other businesses that are now starting to come through. We're now into things like private equity and swim schools and structured yield and agriculture and some different fields than what we've been in before. So um, we've been very fortunate over a long, long, long period of time. We've had excellent people running all these businesses and our investee companies. So to get back to your original question, you need not many people have got rich overnight. Very few people. So if you're prepared to have cash and be patient and invest in good, strong businesses, you'll benefit over the long term. And that's the Soul Pattinson history. We've been, as I said, 121 years. We've never, ever missed paying a dividend. And that goes through the war years, the depression years, GFC, and we're now the only company on the market that's increased our dividend over the last 25 years, each half. So it's a unique company, and we've always had bloody good people running it.
That's the key success to success, and it also shows that patience is a virtue and it pays off. Now, recently, the RBA has just cut the cash rate. How do you play that situation now? Does that change anything for you?
Well, as I said, we've been around a long, long time. I've been on the board since 1984, and I don't know how many of these interest rate cycles I've probably seen, 5 or 6 of them. Um, even at the moment, with the cash rate down at 4.1, it's still not. They're still not very high interest rates. But the predicament everyone got themselves into was money was so cheap when you could virtually, go to the bank and lend your money at 0.5%. Unfortunately, a lot of people did silly things, and now they've all got to come back and refinance around this period of time. So instead of paying 0.5% or 1%, you've got to pay 6, 7, or 8%. So, and a lot of them haven't adjusted that into their cash flows. But obviously, this is a start. But the governor yesterday didn't sound too convincing in further ones down the track. But it's a start. But then on the other side of the coin, you've got retired people who have been getting 4.8 to 5% for their money sitting in the bank. So it makes it hard for people that are homeowners or business owners. But then on the other side of the coin, you've got people who are retired and looking to support themselves and have been getting in a sort of 4.5 to 5% a year, which has been quite attractive compared to what they've been getting. But obviously, in the cycle going forward, unless something dramatic happens, you'll probably see maybe 1 or 2 more this year.
So there's been a lot of talk of the major growth in ETFs
Yeah.
and how that's created a lot of passive investment, which is flowing through, particularly towards our bank stocks. All right, they've had a recent pullback lately. Do you think valuations broadly are stretched as a result?
Well, an ETF tracks the market, and we all know what the market's done in the last 4 or 5 years. So um, these things are excellent vehicles when the market keeps going up. As I said, you've only got to look at some of these companies like ProMedics, WiseTech. Look at Commonwealth Bank. I think they've got to $167 or $168 this week. A lot of people have still got a valuation of $80 to $100 on them. So we've had these extremities in valuations. So, which is anyone that's had an ETF has has enjoyed the ride. But then on the other side, you've got good fund managers and equity managers and mums and dads that haven't been able to get that same return because they've been buying a BHP or a national bank or a more conservative type business that still perform well, but you haven't been getting those horrific returns that you've been getting out of your ETFs.
So yeah, that's definitely been the case. So
And just before we leave that,
yeah,
I would have thought if history repeats itself, there'll probably be some sort of quieting down in the market. So maybe people will then take money out of ETFs and go back into give it to an LIC or a historically good fund manager.
absolutely,
Yeah,
absolutely, which will be quite beneficial to
yeah,
have so many other fund managers.
yeah.
Now, it's in the public domain that you have invested in Vinyl Group, the Australia's only music technology company. I just want to know your motivation behind that investment.
Being at my age, I'm not up to speed as much as you young fellas are, but I've always had a great admiration for what Richard White's done um, and the success he's had. And I have met the senior management there at Vinyl. And they seem to be good, honest, hard-working people. And obviously, your input that got us started there. So, touch wood has been a good investment. May it continue.
Thank you. We sure hope so. We sure hope so. We do believe it will. Now, another winner that you have picked, well, Soul Pattinson yourself picked, was Torson's at TUA. You've done very well out of that. You mentioned that in our last podcast. Our viewers are itching. What's your next one? What's your next big large cap that you guys like?
Again, it's very rare you get these 10 baggers like you get out of QS. And that was all. I think I might have touched on this last time, but that all came out of when we merged TPG with Vodafone, and David Teo, who's Malay Chinese, was very confident that he could make QS work in Singapore. We've now got about 11% of the market. We went in on a disruptor basis. We've now just recently gone into broadband. So things are ticking along very well there. I think the stock, I don't know, it's the one that's closest to my heart, but Soul Pattinson. The share price has come back a little bit. Again, because we're not a Pro-Medics or a WiseTech at the moment in this market, but we've got a raft of excellent businesses. Each half we're continuing to generate extra cash. As I mentioned before, our dividend record is second to none, and with the people we've got running here under Todd Barlow and our investment team and our investees, I'm more than happy to recommend Souls. I can't say too much because we'll obviously announce in a month's time, but I think if you're looking for something that's a bit undervalued at the moment, hard to go past Soul Pattinson, which is SOL on the exchange.
And you always get those dividends. I mean, what a track record.
Yeah.
Now,
well, I think it's an ideal one for a super fund or a mum and dad, because, as I said, you get a good drink twice a year.
We love a good drink. Now, lastly, what is your advice to investors out there that are, they want to know your advice, given you years of experience? What will be your best tip?
Well, I think anyone that's in the market has experienced a very, very difficult time since COVID. I think of a lot of the so-called experts, and I wouldn't call myself an expert, but I've been thinking that there could be a shakeout in the market. But there's so much liquidity. We're now seeing around about 12% of people's super money going into wherever, and of that money, there's somewhere between 20 and 30% of it end up in equities. So we've got a shrinking market here in number of companies we can invest in. So we're seeing more and more demand for top quality equities, and that's not only here, but that's all around the world. But to go back to your question, it's always good to have some cash, because if we do get one of these slowdowns, you're in a position to throw that money at the market. And the GFC wasn't that so long ago, and Soul Pattinson were buying Commonwealth Bank for $27.
Unbelievable.
Macquarie Bank were $14.
Yeah.
And we've done some work recently. Since the GFC, Commonwealth Bank have paid more than $27 just in dividends. And the share price has gone from $27 to about $160. So if you're patient and you buy some good blue chip companies, particularly that people rely on income for, put them in your bottom drawer. You look at them in 10 years' time, you're going to be a long, long way ahead. And be cautious. Don't miss the market. It's stronger than what you are. So just have some common sense and have some cash.
Absolutely. Great advice. We really appreciate your time. Looking forward to hosting you again. And we'll take it from there. Have a great day. Thank you.
All right, thanks, guys. Hope you enjoyed it. Cheers.
Cheers, mate. Cheers, mate.